and welcome back to the channel, everyone. In today's episode of Finance Explained, we will be going over basic stock terms. The key terms that we will be covering today are stock, stock price, volume, beta, market cap, EPS, PE ratios, and dividends. So what exactly is a stock? A stock is a type of security, also known as an equity. It is measured in units of shares, and it represents ownership in the underlying company or entity that issues the stock. There are several different types, including common, preferred, and different classes that have different voting rights. Essentially, if you own a stock, you own a piece of that company, and you are entitled to certain rights depending on the class of the shares. So how exactly is stock price determined? Stock price is the current value of a stock. It is determined by demand. There are bids, which are people willing to buy the stock at a certain price, and there are asks, people willing to sell the stock at a certain price. Where these meet up in terms of demand determines the current value of the stock. The price of the stock is usually displayed along with the change in stock price for that day in terms of a dollar value and as a percentage. Additionally, information displayed might include previous closing price of the stock, so what it was before the market opened, the opening price of the stock today, as prices can change overnight, as well as a 52-week range, so the price that the stock has gone in between for the last year. If you're enjoying the video today or you found it useful and learned a little bit, please do hit that like button and subscribe to the channel. It would mean the world to us. And if you have any comments or requests for future topics, please put those down in the comments section. Now let's get on to the rest of the video. So what exactly is the volume of a stock? The volume is a measure of activity in the stock, and it measures how many shares have been traded over a certain time period. Volume is usually given on a daily basis, but there is also an average daily volume to let you know how often the stock normally trades during a day, so you can compare that with the current day's volume. And as we said, it is an indicator of exactly how much activity is taking place with that stock today. Beta is a commonly used metric to describe the amount of risk or volatility of a stock. Beta is measured by taking the returns of the stock versus the returns of a grouping of stocks called an index, sometimes the S&P 500 or the Dow Jones, over a period of time, generally 5 years. A beta of 1 means that the stock perfectly tracks the index, while a beta above 1 means that the stock is more volatile than the index, while a beta below 1 means that the stock is less volatile than the index, and a beta below 0 means that the stock moves in the opposite or inverse direction of the index. Market capitalization, or market cap, is the total value of shares outstanding for a stock. It is the number of shares times the current price gives you the market cap. Market cap is important because it gives you an idea of the relative size and value of a company. Earnings per share, or EPS, is the company profit divided by the number of shares of stock. This is an indicator of the overall profitability of a company, and this metric is used to compare companies, and it can inform you of the overall value of a stock relative to other companies. The price to earnings ratio, or PE ratio, is a measure of the share price divided by the earnings per share. It gives you the cost per dollar of earnings for the stock. It's once again generally used to compare to other companies within the industry to give you an idea of the relative value of this stock. A dividend is money paid from the company to its shareholders or stock owners. If you owned the stock during a certain time period, the company will pay you out for being an owner. It is generally listed or given as a dollar value and is sometimes presented as dividend yield. An example of dividend yield is on a $100 stock. If the company pays a $2 dividend, you would have a 2% dividend yield. This is direct income to shareholders and is one of the benefits of owning stock in a company. And as always, if you liked the video or found it useful today, please do hit that like button and subscribe to the channel. It really helps us out with the algorithm. And if you have any comments or requests for future topics, please do put those down in the comments section. We hope you learned something today, and we'll see you next time.